Hey, what's up, guys? This is Cody the Coin Raptor, and I want to talk to you today about the state of Bitcoin mining. Okay, I want to go ahead and give you some insights into what I'm seeing on the fundamental side when it comes to Bitcoin miners and what they've been up to. So, what we have right here is the Puell Multiple, and this can be thought of like a chart that kind of indicates miner profitability. You can see we have all these kinds of values all over here. When you take a look at the chart, this one is from Look Into Bitcoin. There is a red section, a red box up here, and a green box down here. Now, the way you can kind of think of this is this green box down here, the start of this line kind of indicates like the minimum miner profitability. So as it dips below this green line right here, it will indicate that miners are having difficulties. They are not being able to remain profitable right below this green line here. And that green line sits at about a 0.5, okay? This red line up here means kind of like a peak profitability, all right? And that's at about 3.5 or so. So if you're curious about miner profitability, you can come over here, take a look at this chart, and it's kind of color-coded in a way that makes sense. If you look at the previous values for the Puell Multiple, you can find that generally speaking, in bear markets, you'll see it dip below that green line I'm talking about and then come under it. Those are areas of major miner capitulation, areas where miners have difficulty remaining profitable. And you can also see in some cases a kind of close to a topping pattern play out here as well. When it comes up here and it just touches that red line, which is the maximum like peak miner profitability, it tends to retreat pretty quickly. So that can be also kind of used to look at potential tops. Like it topped out here in about March of 2021, and I'd say that's about right or so for the Bitcoin price. But we're going to go ahead and zoom in a little bit here to see what miners have been up to lately. And one thing I've noticed here is that it went down to a previous level of 0.35, which indicates, generally speaking, that miners are having about a 33% average. They're earning a 33% or 34% average of the yearly average revenue. So they are down. They're having difficulties at this point. And that was, say, back in June or so. Now, what we've seen in the past couple of months is we've seen a resurgence in the price, as well as a resurgence in this Puell Multiple. It's gone all the way up here to like 0.62, which is about where it's at right now. And basically what this means is that miners are under less stress than they've been in the past. They're more profitable than they were earlier in the year at about June or so, when it came all the way down here to about 0.34. Usually what we wind up seeing in bear markets is it kind of comes down a little bit lower than that, though. It usually comes down here at about 0.3, in that range. The 2018 bear market about 0.3, and down here at about 0.31 in 2015. So it's very similar. It's kind of it was kind of in that range back in June, that June low, but it did not hit quite as low as it was previously in the last few bear markets. So right now, miner profitability is not as bad as it's been in the last couple of months. That's kind of the primary takeaway that I've gotten here from this Puell Multiple. But that's just one indicator that I want to show you. Another indicator I want to show you is the hash rate. So the Bitcoin hash rate is you can kind of think of the Bitcoin hash rate as the total processor capability on the blockchain. Like you have the totality of all the computational power on the blockchain. And what this can kind of indicate to you is actually quite a few things. One thing I look at it in a way of looking at it is as part of a demand, right? Because if you have a high hash rate, that means that there is increased demand to mine Bitcoin. And the reason why you'd have increased demand to mine Bitcoin would be because of the price is increasing, or you're having an increased requirement demand on the network and more people are using it. So I also like to use Bitcoin hash rate as a demand indicator. And Bitcoin hash rate has recovered strongly. We go ahead and zoom in here. Bitcoin hash rate has recovered strongly ever since the, say, July 2021 Chinese Bitcoin miner ban. That's what this huge drop here is, when the Chinese banned Bitcoin mining, and it recovered strongly. It actually surpassed that point, and it went on to make a new high. So the Bitcoin hash rate is at a new high right now. Now that may seem a little strange considering we're in the middle of a bear market, but when you think about it, it kind of makes sense, because right now, a lot of mining equipment is being discounted. Graphics cards are easy to get a hold of. ASICs are cheaper, and miners are coming in and they're buying those. They're buying all that equipment at a discount, and on top of that, they're also able to utilize more efficient miners and cut down on the cost of production of mining Bitcoin. So that's what we're seeing right now. We're seeing a resilient miner environment in which miners are becoming more efficient, more cost effective, and they're pushing the Bitcoin hash rate to a new all-time high. So again, you zoom out here and just look how crazy this run up has been. All right. Now, I also want to go ahead and show you the network difficulty as well. So network difficulty is just basically how difficult it is to mine another block for Bitcoin. So the reason why this is important is because the network difficulty and the hash rate are related. So as the hash rate kind of goes up, the network difficulty also goes up. So that makes it more difficult and less profitable for miners in general. And we can see here something very similar, a very similar chart, because I said that basically they're correlated, and the network difficulty has increased dramatically, which basically means that miners have had a more difficult time mining those individual blocks. And then also, I want to go ahead and take a look at the Bitcoin miner reserve as well. This is something I always try to pay attention to, because this is very, very important. And the Bitcoin miner reserve is just the number of Bitcoin in miners' wallets. All right, so CryptoQuant puts this together, and if we actually zoom out and take a look at the entire chart, it looks kind of strange, and it's got kind of this huge upward swing, and then it goes to about December of 2020, and then there's a huge collapse in the miners' reserve. So basically what that's showing here is that you've had a huge amount of demand for that Bitcoin. That Bitcoin was removed from the miners' wallets and then sold on the exchanges, most likely. And if we take a look at what's happening, what's happened at the last year or so, we can see here that it has mostly moved sideways with a little bit of fluctuations and gyrations. However, if we come over here and look at the August level, August was kind of like a local peak for this miner reserve. Miners had been stockpiling Bitcoin, and then they come to about August or so. That kind of correlates or corresponds to the price. We can put the price up here, and we can see that the price during August was higher than usual. They took that opportunity to dump all their Bitcoin, and then they basically have continued to sell ever since then. So if you kind of put all these charts together, you get a good understanding of how the market is operating from a supply side perspective, from the miner perspective. And the major takeaways from this are that miners are becoming more and more resilient. They're becoming more efficient. They've been pushing the hash rate to new highs. There is increased demand for Bitcoin and mining services throughout the blockchain. And I think that's very bullish. We take a look at the Puell Multiple, and we've seen that the miners' profitability has actually not been as bad as it's been in the last couple of months. So that's a positive for miners. And if the profitability isn't as bad, that means they're going to be less under pressure to sell. And even though the miner reserve has gone down a little bit, it still hasn't gone down to where it was here at about January of 2022. We can zoom out a little bit here. It's actually been a lot lower, especially going into this current year here. It's been a lot lower, and that just goes to show you that miners have been building a position, and they have been very resilient, even through all of this bear market drops and massive bear market price fluctuations. They've been very resilient and still holding a good amount of coins in their wallets. And again, if you zoom out a little bit here, you can see that if you go all the way back to February of 21, there have been a large increase in the amount of coins in miners' wallets. All right, so again, in summation, miners right now are actually looking pretty good. And I expect that this is probably going to continue as long as we don't see like a huge drop in the Bitcoin price. If it goes below, and it stays below 19 to 18,000, then you're going to see more forced selling on miners' parts. It's going to go below these levels that we've seen here for the Puell Multiple, and it will probably go. And if that's the case, if we do see a similar bear market correction that we've seen back in 2018, that will also put miners under stress and they will be forced to sell. All right, so I think miners are on a pretty good ground right now, but it's, again, more like a cautiously optimistic approach to miners because they can definitely start capitulating and force selling, and they'll be forced to sell and drive the price lower. All right, so that's all I've got for you guys today. If you like this content, please let me know. Like and subscribe. Let me know what you want me to talk about. I'm open for ideas, and also chart TA. I'd love to do some more chart TA. This is Cody the Coin Raptor, and I hope to see you on the next video.